Hello everyone and welcome back to my YouTube channel Kuldeep on Tax. Today I am going to speak on the measures taken in tax treaties to put an end to tax avoidance techniques in the backdrop of OECD's Base Erosion and Profit Shifting project that was implemented through BEPS MLI 1.0 in 2016. In this course, I will also touch upon the role that the preamble of tax treaties now very importantly plays in combating tax evasion, tax avoidance, and treaty abuse. Tax evasion clearly denotes a culpable state of mind and is despised at all levels. Tax authorities worldwide act with a heavy hand on such measures, and tax evaders are always scurrying for cover with no room for any reprieve at any level. Hence, unscrupulous actors have set their sights on taking undue advantage of tax avoidance techniques which are granted by governments to minimize tax liability through legal methods. An example of tax avoidance by taking undue advantage of tax treaties could be to set up an artificial structure in a particular jurisdiction to take undue advantage of a tax treaty between the residence and source jurisdictions. As we are all aware, corporate tax is a major revenue generator for governments to install essential infrastructure to satisfy basic human requirements and to successfully achieve the sustainable development goals. However, tax evasion and avoidance have acted as a spanner in the wheel and accelerated USD 1 trillion of profits getting shifted to tax havens in 2022 alone, leading to corporate tax revenue losses that were an equivalent of nearly 10% of corporate tax revenue collected globally. With adoption of artificial structures and money laundering, countries worldwide could lose an estimated USD 4.7 trillion in revenues over the next decade unless substantial reforms are made to global tax rules. In 2022, the Financial Action Task Force conducted a survey of real estate transparency in 32 of its member countries, of which nearly 70% identified the real estate sector as one that poses serious money laundering risks. In the tax treaties that are based on the United Nations Model Tax Convention 2021 and the OECD Model Tax Convention 2017, the combination of the preamble and the principal purpose test, shortly referred to as the PPT, are effectively designed to combat treaty abuse on the following lines. Foremost, in the post MLI scenario, that is the BEPS MLI 1.0, the entire focus of extended treaty benefits has now shifted to undertaking bonafide transactions and preventing double taxation as against securing tax savings through tax avoidance. Then the incidence of invoking PPT provisions may increase as it is to be read with the preamble, where the preamble now clearly lays an emphasis on combating treaty shopping arrangements, combating abusive tax planning, and abusive tax avoidance arrangements or transactions. These follow actually on taking a leaf out of a variety of literature that includes the preamble to the OECD's MLI 1.0, as I have stated earlier, the Vienna Convention, the commentaries on PPT in the respective OECD and UN Model Tax Convention, and instructions on PPT, for example, that were released by the Australian Taxation Office, which abundantly highlight on conjoint application of the preamble during invocation of PPT provisions. It is to be therefore clearly noted that the key to application of PPT provisions lies in the preamble itself. In this slide, in order to avoid adverse action by tax authorities, taxpayers are expected to undertake transactions in such a way that they can discharge their onus, establishing the following four measures, which are to be read in conjunction. Number one, genuine business transaction and commercial reasons for a transaction exist. Second, a purpose for the transaction cannot be ascribed to non-taxation or reduced taxation through tax evasion or tax avoidance. Third, despite no tax advantages, the transaction would be carried out exactly in the same way. And lastly, it cannot reasonably be considered that one of the principal purposes of the arrangement or the transaction is to obtain a treaty benefit and the object and purposes of the treaty is getting defeated. As I have stated earlier, these conditions are to be satisfied in tandem. And when this onus is discharged, tax authorities in any part of the world may not be inclined to invoke PPT provisions as read with the preamble in respect of any arrangement or transaction. Friends, you may read the accompanying link to fully understand and comprehend how the BEPS Multilateral Instrument through the preamble and the PPT will meaningfully de-accelerate tax avoidance and treaty abuse techniques and the precautions or steps which the taxpayers now need to adopt to prevent invocation of these provisions. Thank you very much for your patient watching, and I would look forward to your views, likes and subscriptions to my YouTube channel Kuldeep on Tax. See you again.